Hi, and welcome to the DKAW FinScience Warren Buffett, the stock investigation. So today we'll be looking at 6 different stocks that have been mentioned previously, and these are United Health, Nucor, LAMR, Constellation Brands, Pool Corporation, and LAMR Advertising. So I created a little Python code of which we generated some of the annual returns based on the stocks mentioned as of early November 2025. And as you can see, in terms of the annual return, there is a lot of range looking at the highest negative return of negative 24.6% annually and as high as 24.7% annually. Now, starting off with an equal portfolio, where we're just going to look at everything that's just 1/6, which is going to be roughly 17%. Now, comparing them based on 4 different time periods, so 6 months, 1 year, 2 years, and 5 years, we can see that if we look at an investment amount of 50,000 Rand, typing in the formula and everything, you can see that the time we eventually get a return that's higher than 50K will be within 5 years. Now, drawing up a little summary table to really put everything into perspective, we have that, looking at everything, that the only time we can have a good return, or like the proportion, like a percentage of the percentage increase or decrease, would be the highest increase that would have is like a 20% return, and which might be good, but we are working with stocks, which is a pretty risky asset. So that is roughly this is probably one of the riskiest portfolio we're going to entertain, simply because it is an equal portfolio, and the market changes all the time. Stocks crash and everything. Realistic thing that we can do is try and look at a goal seek function, which basically looks at how much do we have to invest in order to receive a desired outcome of, let's say, $200,000, and we need $166,000. I don't know if you have that type of money, but what I found very interesting is that you can try setting it up to $500,000, and from that you can see that you need approximately $500,000, close to that, $417,000, just to get $500,000 within 5 years. So there has to be some sort of improvement that we can do. Another famous methodology that I used in Excel would be the solver function, where we can see what type of portfolio we can use what type of optimum portfolio we can use in order to gain the maximum value, based on the fact that we've started with $50,000 and eventually we want it to be a max. And putting in the constraint that everything has to be greater than 0, so it is but less than 1, so that it can be within a fraction number, a probability number, and it must equal to 1, since this is a portfolio at the end of the day based on just the small number of stocks that we're looking at. And from that, the maximum amount from this return, you need a roughly 150. You can possibly gain $150,000 just from investing in $50,000. And that seems good and all, but from this, it looks like you need to put all your eggs in one basket. And in other words, you need to put most of your return on the LAMR advertising stock. So this seems all good and well, but it's just simple logic. But the reality is the market changes all the time. So there has to be another way in which we can do that. Python, a code that I drew up looking at the value at risk. You're looking at the fact that we are 95% confidence in that you will lose $1,206 if you put in $50,000. You have a high risk of 27.6%. On top of that, your Sharpe ratio should be high, but it's only 0.29, and the maximum drawdown is literally close to 21.9%. Your best day is 11.1%, and your worst day would be negative 7.4%. So I wouldn't recommend putting all your eggs in one basket, but so if we look at Warren Buffett's proportionality based on the stocks that he has obtained, you can see there's literally small amounts. And if we still looking at the fact that you have $50,000 that you're investing, you can look at with that within 5 years, you'll only have $897.71. But he invested like $1 million in this. This is just like a scenario. And based on this, you can see that regardless of the fact that LAMR advertising has the highest annual rate, Warren Buffett has bought the lowest amount out of the recent purchases. And the highest that he bought was in the highest riskiest amount, which was the Constellation Brands, and that was 0.85%. So yeah, maybe the greater the risk, the greater the reward, I think.